you, Aditya, and congratulations for making this a successful summit 8th year in a row. Good evening, ladies and gentlemen. And it's been a long day for all of y'all. And I think this is the most interesting session of the whole day. And that's why Aditya has purposely kept it in the evening just to wake y'all up. I'll just touch upon some data points for this startup ecosystem that we're talking of. 52 unicorns from India, 153 billion combined valuation of these, 468, 46 billion total fundraising done by them. In this year alone, in the last 4 years, already 10 unicorns. Yet, 86% of the unicorns come from US and China. So we've just started, and it shows that we're catching up fast. In this whole thing, we've seen a pandemic which has been quite long, 1.5 years or so. And today what we're trying to see is how the startup ecosystem from all perspectives has changed or emerged post the pandemic. We've seen that a lot of digital acceleration has happened from the regulator as well as acceptance from the investors alike. With all the stalwarts that we have with us, I'm sure all the questions will be answered. So I'll start with our questions with the panelists. And the first and the obvious point that we want to focus on is how is this pandemic affecting the startups? Has it killed them? Has it made them stronger? So Mr. Nath, my first question to you is, has it helped in accelerating the digital growth and its acceptance, both from the regulator as well as clients? Or has it killed the startup ecosystem?
Sure, Shashi. First of all, thanks for having us. And it's wonderful to see my friends also here. All of us know each other well, and it's just good to see everybody safe and well here. And I hope the audiences, these are trying times. So, kudos for putting this together in trying times like this. No, when you're talking about India's vibrant ecosystem, and I think that that gap the delta is reducing, right? When you were comparing the number of unicorns to China and the Valley, of course they have more, but the gap has definitely reduced. Our our ecosystem is extremely vibrant. Like you see, Vikram and I have the same background, but he's all lit up behind us. So that's exactly what the Indian ecosystem is. It's interesting if you think about it. Last year, the Reliance deal certainly put India on the digital map, right? And if you look at where we all sit, all my friends here, because we're digital VCs, that acceleration was already happening, the digital adoption, and it's only accelerated, right? In one sense, I mean, we saw in our own case, we had a first unicorn in an academy, right? That became a unicorn partly because the way learning has changed and it just got accelerated, right? It was already happening. It's not like the pandemic and the lockdown suddenly caused it. And what is interesting is this is cutting across different segments, right? It is not just enterprises. I mean, enterprise behavior, Sunil looks at deep tech. Enterprise behavior is more to the cloud. Of course, today consumers are sitting and ordering on the apps, but also the small, medium business merchants in India, right? You look at we have a Love Local, you have Khata Book, you have Udaan. So that digital adoption is happening across the spectrum, right? It's not just for one segment. I think that's one. And that's why I think the VC industry, I mean, the venture and angel industry has, in one sense, been a beneficiary. If you look at, our private equity friends, it's a mixed bag, right? You have a lot of headwinds also because one is invested in hard assets, operational heavy businesses. If you look at where we are coming from, it's mainly all digital. And what's driving that is all corporations today either have or are even appointing digital digital officers, right? Chief digital officers. So I think the question is actually not how digital you are, but how non-digital you are, right? I mean, that is basically the wave. So in most cases, there are tailwinds. Of course, we have other challenges like you've got to take care of the health, your own personal health, your mental health, physical health, make sure that all of us come out of this much stronger. But there is no doubt, just quickly, one example, if you look at consumer, I think, has always been the star in India, and we have even more unicorns. I think we had 6 unicorns since the start of this year and counting. But if you look at the other side, built in India for the world, that's also taken off. I mean, all of us have that. If you look at Freshworks, which I don't think is any of our portfolio companies, but 300 mil ARR, right? It's amazing, staggering, right? It's a very proud moment for India. And what that is doing is creating more role models. And so other B2B startups are looking into that and saying, I want to not just conquer India, but take over the world. So I think overall, there's a lot of confidence. You're seeing more unicorns that are coming onto the scene with real businesses. And I'll just stop there, but just saying that definitely the wave has accelerated and has accelerated across the spectrum, right? Not just for only MNCs or only SMBs or consumers, but right across.
It's so heartening to see that one would have expected pandemic to slow down the startups, but it's been a big boon for these companies. Vikram, I'll quickly come across to you and ask you, how do you see changes post the pandemic from a investor viewpoint from this startup ecosystem? If any, are the investors coming in?
Yeah, thanks, Shashi, for having me on this panel, and same sentiments as Sanjay mentioned. It's great to be here amongst friends here in the panel, and I think quite a lot that Sanjay mentioned. I echo those points, but I would like to actually look at it in two different segments, and I think. There was phase one, which happened last year, right? So which was actually a shocker for almost everyone. Nobody knew that there was going to be lockdowns, and people are not prepared for it. Even businesses which were actually generating huge demands, they just couldn't service to those demands just because the entire supply chain broke down all of a sudden. And the revenues came down, crashing down to even zero in many cases. People were doing substantial revenues. And I remember reading somebody's tweet and they said, our revenues are similar to what Amazon is doing in the month of April. So those kind of comments. That was a different time when people actually got exposed to this kind of a situation for the first time. I think at that time it was more about, the storm is coming, I think people were expecting a lot more damage at that time, but fortunately, not much damage happened around that time in terms of the actual number of cases and the impact on the lives. Of course, a lot of lives were impacted even at that time. People recovered. I think we noticed that July, August onwards, there was a substantial recovery, and some of the businesses actually recovered much faster. And some of them actually were then looking at their future projections very differently as compared to pre-COVID times. I think second wave, which we are in the middle of right now, actually again has come quite unexpectedly to to the entire sector, right? So this time, I think the situation is very different. Here we are actually seeing people in the teams getting affected, that somebody's parents are affected, somebody's losing their parents, somebody's losing people in the team itself, people struggling to get beds. Medical supplies is a huge issue. And I think that's unfortunately this time the damage is much worse. And that has actually affected on the ground situation. And this time the mental health is much bigger issue, because when you're seeing so much devastation of life around you, you just can't focus on work. All that said, I think you're right about, just in this year itself, I think I saw the number of maybe 12 unicorns this year itself, which is in itself is speaking about how this India startup ecosystem is actually, despite all these challenges, issues, really, coming up. And a lot of this is actually being driven by things moving online, digitization increasing. And I think some of the sectors are changing fundamentally. I think the healthcare is going to change fundamentally forever. I think that you'll see huge changes. Therefore, the kind of business models which you would see emerging, I actually spent a lot of my professional career in healthcare, and I would say that healthcare will never be same again after this entire thing. EdTech has been a huge area, which I think we are seeing, from 0 to $1 million kind of ARRs in just 3-4 months, kind of things happening. Same thing for newer sectors like cybersecurity, because of the volume of data which is actually out there. So that's another area which is going to emerge in big time. And of course, I think as Sanjay mentioned, even on the retail side, the entire shift towards online buying, and even I believe that penetration of internet towards tier 2, tier 3, rural India, you will see a lot more of that happening. So the opportunity building up in the multilingual areas, accelerating growth in those areas. So it's quite exciting also from the investors' minds perspective. Despite the fact, I think the immediate need is to address the current kind of situation, which I think we are all trying to see whether we can, handle that and manage that well before we go across this.
Also, I would say a lot of access of such kind of products to investors has increased in the last 4-5 years, which has been helpful in getting them to invest in such startups. So, Sunil, you've been doing a fundraise, and I would like to know from you, how has it impacted or changed the fundraising post-COVID?
Before, let me share the sentiments. Good to see all of you healthy and hale and hearty. But we are in midst of the worst of times. Philosophically, we always knew death is a certainty, but we never knew that it can come so soon. And it has major implications all over. We always, time is the one that we wanted to spend with friends, family, colleagues, relatives, with nature, with our hobbies. All that mind is taken away by this COVID incidents. And we believe the value of time is going to be far more multiplied in the times post-COVID. And because of that particular stuff, anything that is going to be resulting in automation, tools, faster decision-making is going to be invested. So given that background, fundraise, whether it is for a portfolio company, whether it is for us, it can get delayed just because you're not able to physically meet the investor. However, the thing that we are seeing is it is time to continuously keep on pitching, keep on reaching out, keep on connecting. Do not leave that particular touch with the investors. Even portfolio companies, what we saw in March, April, May last year, it seemed like everything had come to a halt. But then when it picked up with vengeance. The money started coming in last year in 2020 from all across for funds, for startups, and these unicorns were born. What we are seeing in the fundraise, if you are doing a first fund, it's a tough times. If you are doing subsequent raises with some background, history, qualification, etc., it is much easier. Second time, entrepreneur is finding it easier to come and make a pitch, and rather is able commanding a higher valuation from all of us, and we have to move faster to be able to fund those ventures. So this is one side of it. There are two other developments on the fundraise that have happened. One, because of the COVID scenario, government has been listening to us. The government has opened the tap for the domestic pool of capital. Pension funds, provident funds, private sector superannuation gratuity, as well as the insurance fund of funds. So there is a new pool of capital that is getting unlocked, and they will come in through various fund of fund programs to be run by larger fund of fund managers. That's one thing that is happening. Second, in the last year, many of us have seen significant exits. It is strategic exits happening, or the exits that have happened to subsequent VCs who have been buying our companies. That pace is giving confidence in the Indian ecosystem that these exits have now proven and kept a major gap or a major question mark for India behind. Hence, the fundraising is becoming easier on the back of those circulation or velocity of money that is getting circulated. And for us, all of us, this a large business house like Tata is coming and buying out a significant stake in Big Basket for cash. This is dramatically multiple times more impactful than Walmart coming and buying Flipkart. So that's the kind of change that has taken place. With that, we believe the fundraising process will continue to be healthier despite the pause that we are seeing for the last 2-3 weeks, that there is no work. Our mind is in a helpless state, not able to help many people around who are seeking help at this point in time.
Thanks, Sunil. And I agree totally with you that the situation this time around has been quite grim, and we're seeing hale and hearty people suddenly getting under attack and not able to cope up with this pandemic. But you're right that there's a lot of interest, and investors are looking at it. We also saw in our businesses towards July to December, things move very fast. So, Mr. Mehta, I'll come back to you asking, while we've understood and listened from all these gentlemen on how the ecosystem has fared in this COVID, how investor point of view is there and what is happening on the fundraise, we want you to tell us if there's any change in the composition of the kind of startups that you are seeing today compared to the pre-COVID era. Are you seeing more of tech-enabled digital startups coming your way?
Sure. Thank you, Sashi. And hello, Sanjay, Sunil, Vikram. It's great to meet you guys online. If this was a real conference, we would have been rubbing shoulders with each other. It has been a while seeing all of you in person, but this pandemic, let me just put it in this way. It is said that the plural of anecdote is not data, right? So the single example of pandemic, yes, it's a long period, but should not be extrapolated as a broader rule kind of stuff. So, and VCs have, followed that to the T and investing across for future, assuming that things will become normal while we have the second wave and third wave. We at 100x.vc, we had a survey, sentiment survey, which a lot of the investors and founders filled up. And personally, we see across, so we run in a class mode, 100x.vc, and we see thousands of deals and we select few. And the data, what we see across is deep tech and SaaS companies have grown in multifolds. And almost in our survey, it was shown across 63% of the data on and SaaS. So that's going to be the prime stuff. And what our team is looking into is two, places. One is home economy. Anything which is, touching your one location or a home. Any ideas around it, the whole business around that location or the home economy, be it entertainment, be it education, be it payments, anything which is happening in the home, right, is of an interesting, consumer behavior change which has happened across. And the second one, which we are looking at very closely, is future of work. How the future of work is going to get defined, today, how the information will get collected, disseminated, hiring. There are so many aspects at the work, right? So home and work, these are the two things which has changed quite a lot in this last 18 months. And we see, this consumer behavior change happening across and continuing in some part even after once things become normal. So these are the two things which we at 100x.vc are personally looking at. Having said that, rest of the sectors in the survey, be it healthcare, wellness, fintech, these are all the sectors which people voted across as an interesting sector to invest across in the investor survey side of it. So that's my 2 cents on the sectors which are trending. Shashi, you are on mute.
Yeah, circling back to Sunil, from your side, Yawnest, the first fund looked at very different kind of investments that you did. What is the change that, or the shift that you are seeing in the kind of investments that you're looking at now or the investments coming your way now?
See, we all get to see the general stuff on the health tech and education tech, etc. There is a change when we go to the jury members of business schools and where youth is presenting. The change is much more of sustainability and environment-oriented startups are being talked about. If I have to give an example, this year or the next couple of years, it is going to be going green around electric vehicles. That's an easy thing. Everybody is adopting to it. There are many innovations that have to happen on the electrical vehicle side, on the SaaS side, on the IoT side, on edge computing side. So there are ventures that will be there. This is just one example of it. Otherwise, going green, I believe, is going to be one of the themes that will give some opportunities for us to be investing in. Second, while this work from home and remote working is happening, how do we keep on trusting the documents wherein signature or a stamp of a CEO or an authorized signatory were required? Going forward, we believe the importance of blockchain. Blockchain will now enable the way internet happened to do for information, blockchain will do for transactions. For supply chain, for any kind of banking transaction, the speed and the pace at which blockchain will multiply may not be imagined by us at this particular point in time, but definitely that will bring in trust out there. Cybersecurity has always been talked about. The kind of problems that we are seeing of mental health of people, when you talk to families, parents and the family members are so annoyed that every of their their family members who are working, they are stuck on the computer for all the time for 8 hours to 10 hours. How do we make that change? So Sanjay Mehta talked about this particular stuff, that there is going to be some innovations happening there. So we are looking forward to the changes that will take place post-COVID scenario in these areas, and hopefully some investment will happen on a change. The change that is going to be seen by us particularly or seen by us in the last 3 years. Earlier, we used to be getting engineers who had worked in the software engineering sector and coming and launching their products. Today, we are seeing product first engineers coming and presenting to us. These product first engineers have never worked in any of the services company. Rather, they have worked in R&D centers or product innovation centers and created some computer products, or so are coming and starting their ventures. So that's the other new theme that we are catching on, that there would be better quality product innovations or product startups will be available to us using technologies across that we've talked about.
Yeah, that we're witnessing. In fact, all of us are witnessing a gradual shift happening in the consumer behavior, the way we do things. Mr. Nath, I'll come back to you. With the digital adoption, is funding becoming faster and more accessible to startups? Are we as funds open to now VC meetings, everything online? Is that a shift that you're seeing?
Yeah, absolutely. I'll say, but it's also challenging, right? If you think about, all of us on this panel are involved in early stage. Venture versus private equity, and whichever way you slice and dice it, you have an investment team member do a analysis of an Excel file, and Shashi, you're from the financial industry. You're essentially making a bet on the founders, right? Now, how do you assess a founder over Zoom, right? You can do 10 Zooms or 50 Zooms, you're still not meeting in person. So there are other challenges, right? Obviously, technology is got better. But the answer is yes for a couple of reasons. I think, Sanjay Mehta, Sunil, and Vikram all highlighted a couple of thoughts. So one is, I think, we've heard LPs complaining for the longest time that all of you are very proud about being active investors, right? Where are the exits, right? Show me the money in one sense. You operate in a world where it's all about, show me the money because you're trading in and out and all of that. And I think that's been very positive. And I know we'll cover it later in the panel also, but if you look at the upcoming IPOs, right? If you look at the Zomato, the others, it's very important because earlier these companies were quote unquote just running, to NASDAQ or overseas exchanges, right? Because, when you put so much effort into a startup, you want to increase the probability of success faster, right? You don't want any obstacles. So we can't get around the obstacles. You say, let me just go to the path of least resistance. The fact that these companies are on the way to profitability and want to actively list in India, like Sunil was saying, is very positive, right? That's number one. So the reason funding is more accessible, a couple of reasons. I think that's one. The other is there are many more serial entrepreneurs out there, what we call 2X founders, who are not only starting up, but are also available to mentor, right? And mentor younger startups. So in fact, we like it. If you look at the way when rounds are done, my advice to startups is, of course, take money from VCs. I mean, that's our business. But also bring together some strategic angels and mentors with specific maybe domain expertise or people who trust you, and bring them in, because they're going to help you with operational aspects of the business, right? They're going to help you scale. They're going to help you activate the business. So that's another reason why, more 2X, there are more 2X founders in the ecosystem and there's more funding available. Fact also is that the tech IPOs and public markets in the US have done very well, and they have so much cash to throw off. As a result, valuations have become very expensive in the US. So they are actually looking to India and saying that we are able to get, like I think Sunil put it well, the early avatar of India cross-border was all services, right? Because most of the founders came from the Wipro and Infosys, and today they're PLG, right? Product-led growth. They're coming up from the R&D labs and product first, and then sell. It's not a services model. The fact that you've got great talent here, even growth investors saying that, hey, we're looking at Druva Software, we're looking at Freshworks and Postman. Where are the next Postmen? Where do we want to find them? And that's why you're also seeing funding. You're seeing, it's interesting, right? You're seeing, if you look at the trajectories of all of us, I think all of us have, our AUM is larger than when we started. Of course, we have moved up the value chain. And you're seeing the later stage investors coming in earlier, right? They're all setting up different pockets. They have a seed program, they have a venture program, they have a growth program. So the ecosystem is benefiting, right? Because today there are more pools of capital. Everybody has their own space. But I will come back to fundamentals, right? I think ultimately growth is fantastic, but you have to make money. You have to have a part to making money. And I think IPOs are important because I think what India has not shown traditionally is that you can recycle the cash, right? That's very important, because if a LP gives you 10 crores and you give them 30 crores back, they're really happy because they will give you 20 crores for your next fund from that cash that you return from the distributions, and that is typically not happening. So I think even the acceleration for funds returning capital will become shorter, and overall it's good for the ecosystem. We need to look at growth as well as fundamentals.
Yeah, I would agree, and I deal with most of the investors on the other side, and the biggest issue is that how are the exits happening? And we've not seen too many exits here, but shortening of the whole life cycle to reach an IPO will be of a great help. Vikram, I'd like to talk to you about what is it that, if you can elaborate more on what's happening on the exit side for these companies, and Sanjay started the lead, and maybe you could touch upon this in greater length, because that's one of the worries all investors face today.
So I think Sanjay has highlighted it quite well, but I think the core point here is ultimately the LPs invest in VC funds like ours with the hope that, in a certain time frame, they'll receive their money with certain returns. And I think historically, I'm talking about the domestic venture capital industry, and I think all of us on this panel would have started around the same time, to set up our funds. And, it's been almost like a 10, 11 years journey for all of us. And I think the expectation of the LPs is to, at some point, start seeing those money coming back and, get some returns. At the time when I was raising funds in 2012, kind of a time frame, we actually went to all the institutions in the country, banks, insurance companies. And one of the reactions was that they had invested in private equity funds earlier, domestic private equity funds. These were like sponsored by some of the largest houses like Tata Capital or Birla or Reliance, those kind of funds, fund houses which had set up private equity funds or real estate funds or infrastructure funds. And the experience was extremely bad. People had not seen any returns over a long period of time. Therefore, there was this hesitation of, will this asset class ever return money? And I think that mindset was there until very recently. Interestingly, in the last 6 weeks itself, just from 3 exits, we returned 500 crores to our domestic investors. And I think that actually we've seen has actually changed the mindset of our investors quite substantially. As Sanjay said, a substantial part of that comes back into the follow-on funds, because people get that confidence, want to then therefore put their money back, because then they start seeing the proof of the pudding. And I think the exits now we are seeing not just happening at certain stages, but I think across the stages. Even when we are doing Series A transactions, we are also looking for opportunities where we can give exits to angel investors. We don't like, a cap table having 100 investors. So we want to make sure that the cap table is reduced to as few investors as possible. And similarly, a company like Pharma-Rack, we invested in 2019. We just sold it just like a few weeks ago, just because there was somebody just wanting to buy this. I think the corporate India is also now looking for opportunities to buy out. Reliance is looking to buy out. Quite a few startups have done that already. So I think that the whole idea of the whole ecosystem of looking for assets to acquire and buying this, and I think his mindset has already started building, and this is actually boosting the confidence amongst the LPs, and is therefore also creating newer LP classes like Sunil mentioned. The pension funds. I think even they've started now, while the policy was not there earlier. Even if there was a policy, I think they would still hesitate if there were no exits or no demonstration of exits. Now, I think they're seeing that this asset class works. And I'm quite bullish that, in the next few years, you will see more and more newer categories of LPs coming and investing in funds like ours. And therefore, it's very good for the ecosystem. There'll be newer funds that will be set up. In fact, quite a few funds were set up last year. We'll see a lot more new funds coming this year. And hopefully that should be very, very positive for the entire startup ecosystem.
Shashi, if I may add something out here, I must compliment Vikram for one aspect. We are all familiar with the terminology called unicorn. There's a new terminology for which the Vikram has set a benchmark lately, which is a dragon in a portfolio. Dragon returns are the one wherein one company returns the entire fund corpus back to the investors. Okay, and that was missing in India for long. There are 5-6 such companies that have fund that have made an exit. Vikram's one exit of Purple, wherein 1.35 times of the fund was exited by one exit. Now, these are the exits that give confidence to the investors that one company in a portfolio can give the entire money back. It is 4 to 10 times difficult to have a dragon in a portfolio versus having a unicorn. So, that means you have to invest in a company far, far earlier and take some stake in the company and then double up. More and much such exits will happen. That will set a new benchmark for India.
Agree totally. And in fact, as Vikram started, the early memories of people who've invested 10 years and 12 years back into those high-profile private equity funds and real estate funds had a bad experience. But now people have been able to erase those memories only because of funds like this, which have been able to return money back to the investors in a shortened period also. I'll come back to you, Mr. Mehta. And your firm has done good enough research on the startup ecosystem. And I would like you to throw some light on how iSafe is benefiting investors in the startup ecosystem.
Sure. Thank you, Shashi. That's a pertinent question for 100x. We are in first check VC fund, and we invest before all the guys, be it Sanjay, Nath, Sunil, and Vikram. We take the first check, invest very early, like how angels would do across. We are more like a discovery platform, and the idea was to invest into large volume of deals, 100 deals a year. While we have not been able to achieve the target, but hopefully very soon. Right now we are at 50 deals kind of stuff. And iSafe, safe notes have been very popular in Silicon Valley for early stage investing, and we pioneered that in India. And in the recent survey, we checked out with almost over 200 plus founders and near to around 100 odd investors. And almost 67% of the founders found it very, very useful to quickly close the round, get the money into the bank account. While shareholder agreements take anywhere around 3 to 4 months to close, iSafes are done like over the counter with investors. And for the investor side, it has been a huge benefit using iSafe. Almost 72% of the investors said that they have liked using iSafe. And because we have made it open source, people can just download and use it across. So it is now becoming like a standard in the industry to use across at early stage closure. So for a quick deal closure, iSafe has been very, very handy for investors, and it helps across, get out of those valuation discussions at early stage, close it very quickly without getting into so-called rights and legal discussion, which typically shareholder agreement would have across. So in that sense, it becomes a great opportunity to close a deal very quickly using safe notes. And India, simple agreement for future equity. Anybody can download it from 100x and use it across. It's open source document.
Yeah, that's a big plus point for the investors. So coming back to the forum, and I would leave this question open to anyone who wants to take it. Will we see a flurry of IPOs coming from the unicorns or the startups which have matured? We're hearing Policybazaar, Swiggy. What's your take on this sentiment?
So if I were to share the survey insights, we had one of the questions in terms of how would we be seeing across IPOs. Almost like 65% of the investors said yes. 16 said didn't have a view, and 19% said it will not happen. So sentiment-wise, if you look into the survey, a lot of the investors are looking at IPOs happening. With revised SEBI guidelines, on the innovator growth platform, listing is going to be becoming easy. So hopefully that flight of capital, which was happening earlier, will now not happen across. And, hopefully we'll see those IPOs maybe in 2021, not in 2021, maybe in 2022, but it should happen across. For investors, this is a great opportunity to exit. So IPOs were non-existent in India earlier. Hopefully we had very few like IndiaMart, Naukri, which are like hardly anyone. Quickheal was one venture funded which got listed, but not really, we didn't see large amount of listed startups. So hopefully, yes, and most of the guys here who are up the value chain after 100x would have much more insights, be it Sanjay, Vikram, and Sunil.
Yeah, Shashi, I'll just add to this. It's definitely going to happen, right? You see Dipinder at Zomato and, Yashish at Policybazaar already talking about them. These are very institutionalized cap tables. You look at the quality of the investors who are coming in, they're almost public investors, right? If you look at the proportion of public, these large investors that they're investing in public versus privates has increased. So it'll definitely happen. LPs will also push that, and I think it's good for the ecosystem. Just coming back to something that Sunil and Vikram were talking about, I think on a lighter note, we need some new animals also, right? We've got unicorns, we've got dragons, but it's an interesting point about dragons, for Vikram, in the sense that I think as an industry, we all get excited about the hot new deal, and I think we don't have enough discipline about thinking of exits, right? And I think so it's kudos to Vikram to do that, because that's what LPs and eventually are rewarding you for, right? I mean, you say you're the most active investor, that's great. But think about the quandary you have. Imagine it's already a dragon for the fund. So you say, should I exit? Because now it may become 2x, right? It becomes a 2x dragon. And then there's the opportunity cost to that. So I feel that I think what will be good for the industry is when these IPOs happen, it'll also instill a different sense of discipline on us to think about exits in the same way, give it the same attention that we give investments.
Yeah, which is very important that exits also happen in a disciplined manner. Yes, Sunil, you want to add something?
Sanjay Mehta talked about, because this is a forum of the wealthy, I just want to emphasize on the point of IGP, the Innovative Growth Platform. SEBI is coming up with this guidelines from the point, they're revising the guidelines, and they're revising it from the intention to have a NASDAQ in India created. Now, for that to happen, we need people who are accredited investors, who can invest minimum 2 lakh of rupees in a company, nurture and hold on to that particular investment. We VCs are going to be looking forward to that route to list our companies and then grow from there, because we'll have a fungible currency. We'll be able to acquire businesses, we'll be able to grow faster. So what Sanjay Mehta talked about, for early stage VCs like us, Innovative Growth Platform will be a good platform. You may be able to invest in companies at $100 million, $200 million kind of valuations. You don't have to wait for the IPOs at unicorn valuations to happen on the BSE or NSE. So that opportunity is another one coming up.
Thank you. Another very important question that I want to ask you all is that what is the India opportunity that we are witnessing? We're seeing a lot of B2B and SaaS platforms being built in Bangalore, Gurgaon, Pune. Is this a big opportunity for India?
Maybe I can go first. And I think the way I see it is that B2B opportunities are, India startups catering to the world. And I think basically a lot of that is happening. Indian companies are building very good products. Sanjay talked about Freshworks, and I think it's a great example, how they've been able to take their business to all the corners of the world. And there are quite a few in the making when it comes to B2B. On the other hand, when you're talking about B2C, I think people even from outside are actually eyeing the India consumer markets. It's a huge consumer market, which is actually further building up with the internet penetration going deeper into remote areas. Rural is a big opportunity. Anything which is in tier 2, tier 3 areas coming up in a big way. So I think on the B2C side, more and more opportunities will come up. And I think we're going to see newer kind of opportunities of business models building up there. So that's broadly how I would classify.
Just to add to that, product first engineers from these cities coming at and developing products, whenever we are investing, we have to keep in mind whether in our investment horizon, the company can be $100 million revenue company or not. And that for a B2B business, it is essential for them to service customers globally. They cannot be done only from India. The amount of revenue of Zoho or Freshworks that comes from international markets is a testimony that we have to make that those companies have IP, get that enterprise orientation to go and seek customers worldwide and serve them. If that is ingrained in the company from the beginning, we can see B2B and SaaS businesses scaling up faster, better, and defensible business models will be there.
Very well said. And while we already shooting through our timelines, and it's been a very interesting discussion covering. And to summarize, I would say it's a very, very sunshine area for the investors from the investor point of view, and also for new promoters who are looking at newer areas of developing businesses. Funding is faster, more LPs to invest in. Any closing remarks from any of y'all on the system? Anything that y'all want to say? Otherwise, we'll then take up some questions.
Okay, one remark which is personally very, very close to my heart. We keep saying angels should be investing in startups. startup money has to come in from every pocket, every individual, because we want the children of us to be having a job. Entrepreneurship, innovation has to be nurtured by each and every one of us. Today, there are national pension scheme, NPS, we save our some money, 50,000 rupees a year. Government of India has given you the privilege to do an active choice and allocate 5% of that 50,000 rupees every year towards alternate assets. We are not asking for something big, but at least start allocating that 5% by going and making an active choice. Don't be a passive investor with your NPS. This money is going to be there till the time you're 60 or 70. Put that money into alternate assets by allocating only 5%. That's a very, very heartening appeal so that we have larger pools of capital for our startups.
To add to what Sunil said across, and echoing the sentiment, personally, I've been an angel investor, and investing into startups, almost 150 odd companies. My IRR has been over 100% last 10 years. So it has been extremely rewarding. So I'm just trying to add to what Sunil mentioned across. This is possibly the only asset class where you can influence an outcome. You buy real estate, you buy equities, you can't influence an outcome. Here you can work with startups closely, nurture them, mentor them. We invited Sanjay Nath for our mentoring session, and what a beautiful session he took across. So people like Sanjay and Sunil's partner, Girish, who did a great fab job helping us nurture and mentor startups. It's just amazing how this young companies can be nurtured and blossom to a bigger and larger company. So I would recommend across a lot of the listeners and audience, startup is an asset class where you should look and invest in.
I'm sure, listening to all of you all and the kind of startups coming our way, the kind of returns that one could expect, all investors should compulsorily allocate a part of their portfolio to startups. And you have now a lot of VC funds which are very accessible, and people could look at doing their bit in their portfolio with this segment, which is slowly emerging as a necessary segment in one's portfolio. With that, I thank all of you all gentlemen to be with me in the panel. It's been great talking to you all. Is there any questions we want to take? Yes, Sunil.
Thanks for hosting it so well.
Thank you so much.
Yeah, so Shashi, I'll just come in. Audience, if you have any questions, please put it in the Ask Question tab quickly. We have only a few minutes left for the next session, so I think we can take 2 or 3 questions at max. Okay, there's a first question to all the panel members, which is the one sector that is seeing the majority of new startups right now?
I think deep tech SaaS is the biggest winner into that sector.
Yeah, I think same thing. We're seeing a lot of AI and deep tech startups coming up.
I would add EdTech also to that. I think what is interesting about AI is absolutely agree with Sanjay and Vikram, and in fact Sunil's core is that I think what you're seeing is AI being applied to different use cases, right? Earlier AI was only for B2B, but you're seeing that for vernacular content, you're seeing it for healthcare, preventive heart attacks and strokes. And I think that's the way, right? If you can apply deep tech to real world impact issues, correct? So I think, and EdTech, of course, is also taking up because the way, everybody from children to everyone is learning and upskilling is changing.
So when Sanjay mentioned about healthcare startups and using AI, one more dimension, if it is the data is for AI is being captured using sensors and IoT, the reliability of that data is multiplying. And if you can use those tools to capture the data and then analyze and then give a feedback on the health of a person is going to be far more valuable rather than any data being fed in manually or so. So that's how we are seeing the trends would be more AI, IoT, sensor-led startups.
Sure. So the next question for all the panel members here again. Are your funds, do your funds have any plan of investing in international startups? Are you already doing it or plan to do it in the future?
At 100x.vc, we only invest in Indian startups. We don't invest. Personally, our family office, we have got almost like 60 plus startups invested globally.
So I'll just add to this, before Vikram, if you think about cross-border deep tech SaaS that we've just been talking about, right, and you think about the cross-border corridor, we just talked about the importance of building products and selling them to global customers. So many of those companies in all our portfolio, they have R&D and CTOs and founders here. But very often, one of the founders, the CEOs, and the head of sales are based in North America, Singapore, wherever it is. So, de facto, you are investing in companies, but they are outside. But they all have an India angle. They have an India connect, right? But they basically, like I think one of you all put it beautifully, built in India, but built in India for the world.
Yeah, no, same as what Sanjay said. You know, we technically invest in INR, it's Indian currency, but we have been investing in a few startups which have global footprint. That even founders have moved to the US and are doing very well. So as long as they have an India connect and in India subsidiary as well, so I think we can look at investing in them.
Sure. Next question. Do you foresee VCs partnering with wealth managers or financial advisors so that their clients can get exposure to startup investing? I mean, are you working closely with the wealth management community to reach out to HNI or super HNI?
That's a very, very welcome question. We would love to engage with any and every wealth manager in the country, take it to deeper into the to the people who are having wealth. I must tell an incidents. You know, in 2001, I joined Bharti Airtel. Within 2 months of this thing, we had a board meeting, and Sunil Mittal made a pitch to Warburg Pincus and others, $300 million committed by them. And in the next 4 years, they went back with $1.2 billion. And when they went back by $1.2 billion, I, instead of rejoicing, I was saddened that an opportunity that was so large and so visible like telecom, not a single Indian could get an opportunity to invest in that asset class. Today, we have this opportunity. We are investing in early stages of these companies which are having future, and so this is an asset class. We are taking it to everybody, and we want to partner with more and more wealth managers and kind of educate the HNIs that this is a reliable asset class which can deliver alpha returns versus any other asset class that they own.
Yeah, I can add to this, Shashi. This, the best question has been saved for last. I think it's actually a wonderful opportunity. You know, it's not only are we okay doing it. I'll give you an example. I mean, this is in the public news. Vikram knows, all of you know, one of our partners, Ashish Fafadia, who, and here's the interesting part, right? When you have an interesting, good portfolio, there's a lot of interest into it. If you look at the rise of domestic capital, I can't think of any homegrown manager today that doesn't go after domestic capital. And I like the way Sanjay Mehta used it. We look at all of you as partners, right? Not as investors, because it's not just the capital you're bringing in, but the mentorship and the ideas and advice. And we've been raising opportunity funds in addition to our core funds, Shashi, right? You also may be aware, where you either have a blind pool or you have a basket of securities. And it's a great opportunity for wealth management platforms and investors to do direct angel investments, to invest in funds, to invest in opportunity funds. We actually say do all of the above. There's no one right answer, right? Because all of them have different risk return characteristics. It's a fantastic way to be part of the ecosystem. And we were really surprised because, you know, on a lighter note, you know, earlier you would take a plane to Calcutta or to wherever, you know, to Baroda or Jodhpur for 2 meetings. And now you're sitting and you can do eight meetings a day on Zoom. And you're seeing a patriarch, who runs the family office, dying from Calcutta, the son who is abroad just finishing his studies, all on that Zoom, and you're doing 6-7 Zooms in a day. So I think it's not only is it okay, but it's a wonderful opportunity to participate in the wealth creation with us, and we're happy to do that.
I would like to add, having associated with one of the largest wealth management outfits in the country, that wealth managers are the bridge between the startups and the startup funds and the investors. And this is the route to bring more and more investors into the startup arena. And we're seeing a lot of increase in interest and positivity from investors to look at it.